There's one trading strategy that I use every single day. It's stupid simple, highly repeatable, and it's the reason I'm able to stay consistently profitable in the market. What I'm about to show you isn't complicated. It doesn't rely on indicators, and honestly, even a beginner can't mess this up. In this video, I'll break down the full strategy into 3 clear steps directly on the chart. You'll learn exactly how to execute this strategy, when to enter, where to place your stop, and how to define your targets.
And I'm going to show you real trading examples that you can use in real time, candle by candle. The goal is simple.
The first candle plays a very important role in our trades because it shows us the direction and the type of trading we will have on that day. In this strategy, we have no bias at all, and in the end, we only make decisions based on what the chart and price are showing us. Only the candles tell us what to do. That's why we don't use any complex tools, so the chart doesn't get crowded and we don't get confused. We don't want to make decision-making difficult for ourselves. At the right moment, with full focus and without any guessing, we execute trades strictly based on the results of the strategy. You will see next that this strategy gives you trading opportunities every single day, and on some days, it can even provide 2 signals.
So if you trade forex, crypto, or gold, make sure you watch this till the end. Let's get straight into it.
The first step to eliminate timing errors is to change the TradingView time zone so all of us trade based on the same session and no mistakes happen. The first candle in the New York time zone is our first step for making trading decisions for that day, and it defines around 50% of the path for us.
We identify the high, the low, and the midpoint of the Asian session. This is the most important part of this strategy, and to simplify the analysis and identification process, an indicator automatically marks all of these elements. You can do this manually using just 3 simple lines, but I definitely recommend using this automatic indicator so errors in this part are reduced to 0.
No extra analysis, no changing time frames, no confusion. We analyze and trade on a single time frame. All we need is for the required pattern to form, and that's it. In this section, the entry point, stop loss, and take profit are fully and clearly defined. We have done extensive backtesting and forward testing to reach these exact levels.
And finally, we go through ideal and valid live trade examples for this strategy. This way, you learn exactly where and when to make the best decisions in a live market, and we go through the full analysis process from start to finish together. This is the best way to learn. Now pay attention to this image. This is the time and price range of the Asian session, which the Asia High, Low, Midlines indicator has automatically identified for us and made the process easier. The time frame is set to 5 minutes.
Now we set the TradingView time zone to New York. Within the Asian session, we mark the 00 candle with a vertical line on the chart. From the New York 0 candle until the end of the Asian session, it tells us what type of trade we are going to have that day. If this movement is bullish, we will look for sell trades. If the movement is bearish, we will look for buy trades. Here we have an uptrend move, so we are looking for a sell trade and searching for a short pattern. Now that everything on the chart is clear, such as the high and low, and the 0 candle is marked, according to the scalping strategy, for a sell trade, we focus on the Asian session high line, which is extended to the right. Now the price and candles must show a fast move up and then back down toward this high line. What does that mean? Pay close attention to this part. It means price must break above the high line and then quickly return below it without spending much time above that level, so no price consolidation occurs. This fast move has many names, such as liquidity grab or fake breakout. This movement carries an important meaning for us. I broke this high and created a new high, but it seems the direction was wrong. Now that the liquidity above this high has been taken, it's time to return to the main path, and the real trend is starting from here. And this is where we ride the move and enter the trade. So how do we trade? Very simple. Now it's time to find a reliable entry pattern. How? We identify the price low that caused the creation of the new high and the breakout move. We mark it, and this becomes our key support level. We draw a horizontal line from this low. Now price candles must break this support level to the downside and form a change of structure. After this downside break, final confirmation is given and it's time to trade. The best entry point is this broken support level. We place a sell limit order at this level and wait for price to come back and activate it. And here this happens and the order is triggered. The stop loss should be placed safely above the last high, which in this trade is right here. The take profit is set to a fixed 2R reward and we exit the trade. Experienced traders know how powerful a 1-to-2 risk-to-reward ratio is, and they truly appreciate this opportunity. And here is the take profit. We take our share from the market and exit.
Now let's move to the live trade, which has several very important points that will make this strategy fully clear for you. First, we set the TradingView time zone to New York. We add the Asia session high-low midlines indicator to the chart. A floating box appears on the chart and updates with every new candle and price movement. On the 5-minute time frame, we mark the New York 0 candle. Now we wait for the Asian session to close, so the highest price, lowest price, and the direction from the 0 candle become clear. Here, this happens. The movement from the 0 candle to the end of the session is clearly bullish, so we are looking for sell trades. From now on, any pattern that forms around the high line is valid for trading. Here, the breakout forms, but it must quickly return below the high line to be tradable. Otherwise, we have consolidation and the day is canceled for us. It returned quickly. Now we wait for a low to form for final confirmation. Here, price moved upward in one strong push and did not form a proper low, so it's unusable for trading. And this low is too far away, which would create a large stop loss. It looks like price wants to create a new high. A new high is formed. Look how much price is playing around. Good, it returned quickly again. Pay attention, never rush into a trade. Until the setup is fully and 100% formed, do not take a trade. This example is a clear case of a setup with uncertainty and no confirmation yet, so patience is the key. Great, this low is formed and becomes our trading reference. Now this low must be broken downward to confirm the change of structure. We wait. It looks like price is trying to make another high. It seems buyers don't have enough strength anymore. I think price is preparing to drop. It tried to break the low but failed. Very interesting. These candles do not count as a valid break. They lack strength. Do not trade based on these candles. As expected, price returned upward, so the trade is canceled here. Not trading is better than making a wrong trade. This candle gave some hope. We wait for one more candle for a proper break. Excellent. This is a strong and valid break for trading. This low is now clearly broken. Now we place the sell limit order at this level. We place the stop loss above this high, and the take profit is set to a fixed 2R. Price comes back up to activate the order. Yes, trust the strategy and do not touch anything. Do not move anything. The order is triggered. Price is moving toward the stop loss. We stay patient. As long as the stop loss is not hit, the take profit is still possible. Price tested the high again. It doesn't always get this complicated. Today was difficult. That's why I always say the stop loss must be placed above valid highs and below valid lows because of these movements. Price turned again, and now we have the drop. It's heading toward take profit. And the take profit is hit. A plus 2R reward is achieved.
This example was on gold, and this strategy works very well on this instrument and has proven itself. It also has a very strong win rate. This is MetisFX, the world of trading strategies, including scalping, day trading, and fast scalping. So don't forget to subscribe, like the video, and share it with your trader friends to support the channel. At the end of the video, this strategy is also shown on Bitcoin, where you can capture solid profits.